Let's talk about renter's insurance. For a lot of us, it just feels like another one of those fixed costs, right? A bill you just have to pay, no questions asked. But what if I told you that's not the whole story? What if you actually have more control than you think? Today, we're going to dive into 15 proven ways you can take charge of that premium and put more of your money right back where it belongs, in your pocket. So let's just get right to it with the biggest question of all. Are you overpaying for your renter's insurance? I'm going to go out on a limb and say there's a pretty good chance you are. The good news? We're about to walk through exactly how to fix that. So here's our game plan for today. We're going to start with the quick wins, stuff you can do right away. Then we'll move into some smart adjustments that take a little more thought. After that, we'll cover the long game. And don't worry, we'll wrap it all up with a super clear action plan to get you started. Okay, so the main idea here is this. This isn't just about saving a few bucks. It's really about empowerment. It's about understanding all the different levers you can pull to turn what seems like this fixed, unchangeable cost into an expense that you are actively managing. All right, let's kick things off with part one, the quick wins. Think of these as the low-hanging fruit, really simple, powerful changes you can make, like today, and see immediate savings. First up, and this is probably the easiest win on the entire list, bundling. If you have car insurance, the very first call you make should be to that same company. You know, insurers just love customers with multiple policies, and believe me, they reward them for it. And the impact is huge. We're not just talking about a few dollars here. Bundling your renters and auto insurance can literally slash your bill by a whopping 10 to 25%. That's seriously one of the single biggest discounts you can get, period. Next up, make your apartment safer. I mean, insurance is all about risk, right? So the less risky you appear, the less you're going to pay. Installing devices like these, smoke alarms, good locks, maybe even a security system, it tells your insurer that you're serious about preventing claims. A professionally monitored security system alone can often get you a discount of 5% or even more. Here is a pro tip for you. Don't just assume your insurance company is giving you every single discount you qualify for. You have to ask. Just run down a list like this with your agent. Are you a non-smoker? Check. Have you been claims-free for a few years? Check. Maybe you're part of an alumni association. Each one of these could be a small discount that really starts to add up. Okay, this one is just simple math. A lot of companies will tack on a little processing fee for every single monthly payment you make. So by paying your premium in one lump sum for the whole year, you can completely wipe out those fees. We're talking $25, maybe even $50 in savings. It's such an easy switch to make. All right, so we covered the quick wins. Now let's move on to part two, the smart adjustments. These tips, well, they require a little more thought, but they can unlock even bigger savings. So your deductible. That's the amount of money you agree to pay out of pocket on a claim before your insurance even starts to kick in. And there's this inverse relationship here. The more financial risk you're willing to take on by choosing a higher deductible, the lower your insurer is going to make your premium. And you can see that trade-off right here in action. I mean, look, just jumping from a $500 deductible to a $1,001 can lower your annual premium pretty significantly. The key, though, and this is super important, is to only choose a deductible that you could comfortably pay out of your emergency fund tomorrow if you had to. This is another really crucial choice you have to make. So, you've got an actual cash value policy, or ACV. That one's cheaper. It'll pay you what your 5-year-old TV is actually worth today, which, let's be honest, probably isn't much. Then you have a replacement cost value policy, or RCV. It costs more, but it pays out enough for you to go buy a brand new equivalent TV. So, choosing ACV saves you money on the premium now, but you get less back in a claim later. You know, it's so easy to just pull a number out of thin air when someone asks how much your stuff is worth. But if you guess too high, you're just paying for coverage you don't actually need. So take an hour, walk through your place with your phone, make a video, and make a realistic list. Ensure what you actually have, not what you think you have. And that brings us to our final set of strategies in part 3, the long game. These aren't really quick fixes. They're more like financial habits and strategic decisions that are going to keep your rates low for years and years to come. Now, this next one might surprise you, but it is hugely important. In most states, your credit history actually affects your insurance rates. Why? Well, because data shows that people who are financially responsible also tend to be less likely to file claims. So, paying your bills on time doesn't just help your credit score, it can directly lower your insurance bill. Let's think about a pretty common scenario. Your friend accidentally knocks over a lamp and it breaks. It costs $200 to replace. Now, if your deductible is $500, you can't claim it anyway. But what if your deductible was only $100? Should you file that claim to get $100 back? The answer is almost certainly no. You see, insurance is really for catastrophes, not minor inconveniences. Filing frequent, small claims can get you labeled as a high-risk client, and that can cause your premium to go up way more than the value of the claim itself. It's usually better to just pay for the small stuff out of pocket. This one's about finding a tricky balance. You should absolutely shop around and compare quotes every year or two to make sure you're getting a good deal. But before you just jump ship for a slightly lower price, call your current insurer. Ask them flat out if they offer a loyalty or renewal discount. Sometimes staying put is actually the smarter move.
Okay, we have covered a lot of ground. Everything from quick fixes to long-term habits. So now let's pull it all together into a really simple, straightforward action plan that you can use to start saving, like, right away.
Here it is, your 3-step action plan. Step 1, grab the quick wins. That means calling your insurer to ask about bundling and every single discount. Step 2, make the smart adjustments. Review your deductible and your coverage levels. And step 3, play the long game. Protect your credit and your claims history.
And remember, the goal here is not to get overwhelmed. You do not have to implement all 15 of these strategies by tomorrow. The real takeaway is to just pick one. Seriously, just one. Choose the easiest one for you and just start today.
So that leaves us with one final crucial question. Looking at all these different strategies, from bundling your policies to raising your deductible to just asking for a simple discount, what's the very first step you are going to take to lower your bill?